Hi everyone, my name is Ben Jones and I'm an analyst at Dorsey, Wright and Associates, and today I want to offer a few actionable ideas for the Indian stock market. But first, let's just kind of digest where we are right now. Currently we're witnessing the major Indian market indicators point to the more defensive side. That's a result of lower prices and sell signals. Yet the overall trend is still positive, and in my opinion, this still suggests that there's still some opportunities at the moment. You just need to be cautious, and you need to rely on trend and relative strength to be your guide. And so when you're browsing our system, whether it's on the Dorsey Wright website or on StockEasy.com, it's important to use the tools that are available to you. You'll notice on the StockEasy website, there's a buy on pullback report. There's also a breakout report on the DWA section. Now, if you log into the Dorsey Wright system, you'll be able to use a query engine, or pretty much a search tool that allows you to dive deep into the database of Indian stocks to find those stocks that are currently breaking out, have positive relative strength against the market, and are trending higher, i.e. in positive trends. And I found a few stocks that I want to bring to your attention right now. The first one is Grinwell Norton Limited. This stock is trading in a positive trend. It broke out in April when we saw the Nifty kind of have that bounce, yet it pulled back and it's right smack dab near the middle of its 10-week trading band, right at its mean. It has a technical attribute rating of 5, so it's outperforming the market and it's outperforming its peers. And it's also in a decent sector, the industrial sector. So this is one I would be a buyer at the market, and I would put a stop there around 220. If it breaks down to that level, it would violate the bullish support line and the trend would turn negative. The next stock is Shoppers Stop Limited. This stock is trading in an overall positive trend. We saw it pull back with the overall market this past winter, but now it's rising in a higher tops, higher bottoms, a very orderly bullish pattern, and we recently saw it break a spread triple top, breaking through multiple levels of resistance, and you can buy right here. It's a 5 for 5er, looks good. Kovai Medical Center. This is another stock that has broke through multiple levels of resistance. It's trading in a positive trend. This is one that kind of we've talked about before in the way that its pattern has developed. It broke a double top and then pulled back on its trend chart. So you're getting a better entry point here for this stock. You could be a buyer here with a stop at 118. A move to that level would violate the bullish support line and the trend would turn negative. Siemens India. This is one stock that we've had on our report before. Ever since April, it's had some lower tops, lower bottoms, but it held up above the positive trend line. This is one that I would buy right now. Why? Because it just reversed up in X's above support. It's a 5 for 5er, and you have a nice risk reward right here because it has a tight stop there. You can place it at 830. And then Bosch Limited, another stock that has continued to break out even with the recent weakness we've seen in the Indian equity market. It's a 5 for 5er. Its weekly momentum just turned positive. I would be a buyer here with a short-term stop there around 650, or you could look around the 6,300 level. 6,300 level. So that's it for today. We'll be glad to talk to you next week. If you feel free to friend us on Facebook as well as StockEasy, and if you have any ideas or want to send us a message, feel free to do so. But we'll talk to you next week.